Hello and welcome to this deep dive into the Wirecard scandal, a cautionary tale that rocked the European financial sector in 2020. If you were following tech and finance news during that period, you'll recall that Wirecard was once celebrated as Germany's champion in the rapidly expanding world of digital payments. Its inclusion in the prestigious DAX 30 index, home to Germany's top public companies, symbolized a new era where nimble fintechs could outpace traditional banks. But behind the glossy presentations and swift market growth, cracks were forming. When the truth surfaced, Wirecard went from a multi-billion-euro fintech star to a bankrupt pariah in a matter of days. This script will explain how Wirecard climbed to dizzying heights, the red flags ignored by investors and regulators, and the ultimate unraveling that thrust the company into one of the largest corporate frauds in German history. Wirecard was founded in 1999 amid the dot-com boom, initially focusing on online gambling and adult entertainment payment processing, niche but lucrative market. As e-commerce flourished in the 2000s, Wirecard broadened its services to include payment gateways for mainstream retailers and financial institutions. Guided by CEO Markus Braun, Wirecard began an aggressive growth strategy, acquiring or partnering with payment firms across the globe. With each purchase, the company claimed to gain significant new market, from Asia to Latin America. The brand image transformed from a small German processor to a globe-spanning fintech. By 2018, it had replaced Commerzbank in the DAX index, heralding a shift where innovative tech overtook old-guard finance. Wirecard portrayed itself as more than just a payments vendor. It championed AI-driven risk analysis, frictionless digital banking, and financial technology solutions for the 21st century. Investors, enamored by the success of U.S. fintechs like PayPal and Square, saw Wirecard as Europe's best bet for matching that momentum. Share prices soared, turning Braun into a billionaire and Wirecard employees into proud stakeholders in an apparent unstoppable success story. Despite Wirecard's unstoppable facade, rumors persisted about irregularities in the company's balance sheets and revenue figures. As early as 2015, a series of press articles, especially from the Financial Times, raised questions on whether segments of Wirecard's revenue streams were artificially inflated. Hedge funds that specialized in short selling began taking positions against Wirecard, alleging the firm used undisclosed partner companies to fabricate sales. But each time negative reporting surfaced, Wirecard management dismissed it as a smear campaign orchestrated by short sellers. Remarkably, German regulator BaFin took Wirecard's side, even banning short sales of Wirecard stock briefly in 2019. The official stance, supported by some local media, was that foreign speculators aimed to undermine a national fintech champion. Between late 2018 and 2019, multiple Financial Times exposés detailed suspicious internal documents, alleged round-tripping of funds, and employees in Asia reporting irregular accounting. Wirecard vehemently denied all wrongdoing, threatening legal action against detractors. Nonetheless, the chorus of skeptics grew louder, though their warnings were largely overshadowed by Wirecard's robust share performance and continued expansion narrative. By early 2020, the pressure on Wirecard to prove its integrity became immense. Auditors from KPMG were called in to conduct a special independent review. Their findings, published in April 2020, were murky. While not definitively confirming fraud, they highlighted a lack of documentation supporting certain third-party transactions. Around the same time, Wirecard's official auditor, Ernst & Young, EY, faced internal difficulties verifying certain trust accounts said to hold significant sums. In June 2020, Wirecard publicly acknowledged it was unable to locate €1.9 billion in cash supposedly held in Philippines banks. The banks in question denied Wirecard's claims, stating no such funds existed in their branches. Within days, Braun resigned, and authorities began investigating the disappearance. As it became clear the money never existed, Wirecard's share price plummeted over 80% in a single day. The meltdown continued as other executives abruptly left. Markus Braun was arrested on suspicion of market manipulation and false accounting. An international warrant was issued for Jan Marsalek, Wirecard COO, who vanished without a trace, allegedly fleeing to Russia or Belarus under clandestine circumstances. Facing mounting evidence, Wirecard declared insolvency on June 25, 2020, officially marking the collapse of a once proud fintech giant. Critics quickly turned to BaFin, the German financial regulator, and local political leaders, accusing them of failing to act despite warnings. Some alleged a pro-Wirecard bias, as the agency had targeted short sellers rather than investigating potential fraud. Parliamentary hearings ensued, exposing how officials had dismissed repeated red flags. The fiasco damaged Germany's international credibility regarding corporate governance and financial regulation. EY faced a major crisis of confidence after it became evident they had signed off on Wirecard's financial statements for years, missing the €1.9 billion discrepancy. Scrutiny of the auditing process raised questions about the reliability of auditors paid by the same firms they examined. In subsequent months, legal actions loomed, with lawsuits accusing EY of neglecting fundamental checks that might have revealed non-existent accounts. From Berlin to Brussels, policymakers demanded stronger oversight frameworks. Concepts like rotating auditors more frequently, empowering regulators to intervene faster, and enforcing personal liability on board members gained traction. Some watchers called for a European version of the US's SEC to unify continental regulation, ensuring faster cross-border cooperation. Thousands of investors, from retail to institutional, lost significant wealth overnight. The Wirecard brand quickly became toxic, with assets sold to competitors or shuttered entirely. Remaining employees struggled as the firm's operations wound down. Though some smaller subsidiaries found buyers, the core business was gutted, signifying the abrupt end of Europe's fleeting fintech unicorn's dream. Jan Marsalek's disappearance turned into a global mystery. Reports claimed he had ties to security services and might have used encrypted communication to escape. This saga added a spy novel twist to an already dramatic scandal. With Braun and other executives facing charges, Marsalek's flight symbolized the unsettled questions about who orchestrated or benefited from the fraud's hidden mechanics. Wirecard's collapse remains a major cautionary tale, demonstrating that even a publicly traded, widely praised tech success story can hide blatant accounting manipulation. Observers stress that robust due diligence, vigilant whistleblowers, skeptical journalism, and unbiased oversight are vital to preventing similar fiasco. Germany, in particular, faced introspection over whether its desire to foster a national tech champion allowed a culture of complacency. Wirecard's 2020 scandal was nothing short of astonishing. A multi-billion-euro fintech empire undone by phantom accounts, alleged conspiracies, and a brazen disregard for compliance. For a time, it seemed unstoppable, securing a seat among Germany's top companies and expanding into every corner of digital finance. But with illusions laid bare, investors, auditors, and regulators discovered the reality of wholesale fraud. As the dust settled, Wirecard stands as a stark reminder of how hype can blind markets to glaring irregularities. It underscores the urgent need for a robust regulatory environment, empowered journalists, and critical investor analysis. When trust is misplaced, and big ambitions go unchecked, even the brightest innovators can collapse, leaving behind a trail of lawsuits, shattered reputations, and calls for systematic reforms. If there is a silver lining, it's that the Wirecard debacle spurred governments and industries alike to re-examine how to detect and deter corporate misconduct, hopefully reducing the likelihood of a similar meltdown in the future.